Do you know what the jackhammer effect is on stocks? And why should you even care? That's a great question. But what is the jackhammer effect? And one of the things I'm going to be sharing with you today in today's Market Tech Talk is how the jackhammer effect helps you determine when the market may be topping, which we know with the current condition of the market, it's really extended. So, is it time for a top? Is it time for a correction? We're going to check that out as we get deeper into today's session. Hey, I'm Dennis Wilborn, the AutoPilot Trader. Thanks for joining us to the this live stream. We're going to have some fun. We're going to take a look at the stocks and the news. We're going to take a look at the charts to see what's going on with that. Jake and Graham, thanks a lot for being here. Welcome aboard. We're broadcasting right now currently over on Instagram. We're about broadcasting it on YouTube and also Twitter. Anybody who's joined us over there, say hi. Drop a comment down in the chat box so I know that you basically are all connected. And again, back to my original question we started the day off with. Do you know what the jackhammer effect is? Yes or no? And just drop a note, just a Y or an N. Do you know what the jackhammer effect is and why it's important to your trading? So let's go ahead and jump over and start looking at the stocks, and we're going to move really quickly today. And I was very interested in move a couple of things around here. There we go. What are some of the main things in the news for today? Well, one, let's get down here to the bottom. Dow Jones slides 200 points on surprising GDP data, and I know I am not going to sleep tonight knowing that Cathie Wood is selling Nvidia. So is that why is Cathie Wood? Do we care? Do you care? If you care about Cathie Wood selling Nvidia, put a big Y in the chat box. But let's take a look at that news item and see what the heck is going on. So let's pop that up. And if we just look at a weaker than expected GDP data ahead of the opening bell caused the market to sell off. Meanwhile, famed investor Cathie Wood continue to sell shares of Nvidia on the stock market today. Does she know something the rest of us don't? Or is she just trimming her position because she had one huge profit on Nvidia? We'll take a look at that stock here in just a moment. What else is going on? The Treasury ticked lower, 4.29%. And she sold 6,700 shares of Nvidia. And on Monday, she sold another 2,700 shares of Nvidia. And the GDP dipped 3.2% from what was expected to be 3.3%, thus causing a rush to the exit on the market. But we've seen it come back now that it is back in condition. But let's take a real quick look over at Nvidia. What the heck is going on? And if you have any questions today, please drop a question down in the, if you want us to take a look at a particular stock or anything like that, that's what we're here to do, is to help you take a look at the stocks you want to trade. So I'm going to go over here and I am going to stop my screen share. I'm going to pop up a new screen share. And there we go. Here is Nvidia. As you can see, this is a daily chart on Nvidia. And even though Cathie Wood sold some shares of Nvidia today, it looks like Nvidia is not taken, not really upset about it. And it could continue. It's just doing a a pullback into what could be a bounce area. Whenever you get a breakout above an area, if you're a breakout trader, about 65 to 75% of all trades that break out, if you're a breakout trader, you're going to get a pullback. Now, depending on where you bought on the pullback, or correction, on the breakout, your pucker factor may be just getting really huge when you're getting this 5, 6, 7% paper loss. And so that's one of the reasons why I like to do pullbacks. Now on Nvidia, what it looks like it's doing right now is just doing a low. Move this up so I can see it a little bit better. Yeah, you can see that. And I'm going to grab. And look what's going on here. This is basically just a very low volume pullback. There's the volume down there. And we're just basically doing a nice little flag back into a level of past support as a breakout at about the 746. Are the weekly charts telling us anything different that we need to be concerned with? Now, I realize that the weekly charts, the weekly information is not done yet. And so what we want to be looking at is, do we have a signal shaping up on Nvidia to say it's time to sell? And the answer to that is no. We have no, while this could be an inside day, or inside week, which could lead to additional selling. A normal pullback would be, well, where would the normal pullback be? This is on the weekly. Throw in a Fibonacci on that really quickly from high-low, from that low down to this high right here. A normal pullback on Nvidia without anybody getting upset about it would be a pullback to about the 618, which is 689, the 50, which is 648, or a little bit lower at 607. That's the magic fib box that I'm always keeping an eye on once we do start to roll over. Right now, even though Kathy Woods is selling some of her Nvidia, does not necessarily mean that you should be racing for the door if you own Nvidia. Jake asked a question. All right, makes a statement. Nvidia likes to do a whole bunch of nothing after earnings. And so that may be exactly what we're getting. And plus, Jake, the other thing is this is one heck of a move. So profit taking is in order. And so that's what we're having with that. Now let's jump back to the next news item. There we go. Nope, that's not what I want. One of the other things that we want to be taking a look at is in particular stocks that are also showing a nice move up. Let me. Okay. I'm not seeing my darn. Okay, guys, as I'm working over towards finding what I'm looking for, I'm going to have to basically stop. Share screen. Okay, timeout. Now I know what it feels like to have things go crazy. Share that. There we go. Let me see if I can stop that and share something else here. Okay. I apologize for this. It is not showing me what I am looking to find, folks. Okay, well, I guess that basically, I'll have to go back and see if I can find that because I'm not able to get back to the news section. So I will basically just run through the news and we will talk about that specifically. And maybe I need to back that off. There we go. Okay, what I can do is I can show you some charts, and I will go to that chart right now. Yeah, so some of the other entities that we want to take a look at is crypto. Crypto basically is getting a big run, and on crypto, a couple of stocks really stand out. One is Marathon. Marathon is a mining company, and it has earnings coming up the end of the day today. And as you can see, it is pushed up here, hit its old high, pushed up. And so we'll see what happens after hours. Is it going to reverse and slide back down, or not? And we will check that out to see if that in fact does take place. And so that's one of the things we're looking at with the crypto, along with Mara, Coinbase. Coinbase has actually already had its earnings back here, and it's doing a nice little breakout. So how do we want to potentially trade Coinbase? If you're interested in trading Coinbase, let me remove this drawing, and I'm going to draw in here a line. Now, there's a couple of tricks you can do here. One, of course, it has the highs here, but because the stocks turned back around and started selling off right there, by selling off to this lower level, we know the body of the candlestick makes a much stronger level, to basically find support. So it would not surprise me to see Coinbase pull back towards that level. And now that we have it in place, we can just go over to the daily chart, and it identifies another level, again, going back to the bodies on this breakout. Here's a good body right there. So somewhere in that range, we can anticipate a potential bounce. And so put an alert about 190 and also down at 181. One of the other things I like to do is just, okay, from this swing low here to this swing high here, where does that range come in? And I'll bet you before I draw this line, you'll find that it's going to be right about the magic fib box. Let's see how it works out. Oh my goodness, here's the magic fib box right here. The high sign here, and if I go up to this high here, that covers the magic fib box pretty darn well. So it's somewhere, where does that reach up to? 192.52. So put an alert at 193. Then the midsection of that 186, I would put an alert at somewhere between 187 and 188. And then down here, 182-ish would be give me a warning saying, hey, we can basically jump into this trade. Let me get back over here. It's funny how doing these lives, you kind of feel like the old time TV guys, I guess, that were doing live shows, and they would just have to make it up as they as they went along when something would break, and that's exactly what I feel just happened. So let's see here. Aha! I got it back. There we go. So I'm going to go back here and find the news, and we'll get back to a couple of the news items on the IBD watch list. There's a couple of them that I really want to be, highlighting today. So here is the new. Continuing down with the news. Picked up the news. Okay. A couple of other things that I'm really looking at is, what about the Magnificent Seven? Right here on this news area here, it talks about the Magnificent Seven to, stocks to buy and to watch for. But there was an earlier report that talked about the Magnificent Seven stocks. Are we seeing a shakeup in them? And one of the things I'm looking at is Tesla, of course. Tesla has the potential, Magnificent Seven stock. Is Tesla a buy now? We'll take a look at that. Google continues to slide. I did a video not too long ago talking about Tesla and how far it could go in the downward facing channel that its current price action are currently into. But this tells us about, Magnificent Seven stocks see a shakeup. And here are the list of the things that are being shaken up. Let's see if I can pop that up. Yeah, there we go. And so a good place to go check. So what are the Magnificent Seven? It's Google, Apple, Amazon, Meta, Microsoft, Nvidia, and Tesla. If we look at Tesla, and I'll go over and do that right now. Tesla, is it a buy? Is Tesla the one that's a buy? Okay, let's take a look. Tesla, TSLA. As we've seen, Tesla is pushing back up. A couple of the problems with Tesla's having right now is that it's having a challenge getting back above the 50-day moving average. One of the things we're seeing here that I wanted to be chatting about is the jackhammer effect. And the jackhammer effect happens to happen both at bottoms and tops. What does that mean? Well, I'll show you when we get over to look at something that's topping, like perhaps the cues of exactly what I mean. But you can see the jackhammer effect on both. So Tesla looking kind of interesting. Do I want to buy it now? I'm getting a bullish cross on the 820. And we're getting let's see, over on the weekly chart. Yeah, weekly chart projecting up. We're projecting that we'll hit up here about the 241 level somewhere around the last part of March or first part of April on NVDA. Similar type question. Daily chart. Okay, we're not seeing the jackhammer effect taking place yet, but it is in the offing. Next up, What about AMD? Is AMD a buy with all the AI stuff that's going on about it? Note, we had earnings way back here. However, it's just kind of consolidating here. Is it a buy? Interesting pattern in that we're getting a little of a bit of a pullback here. Let me get my... We're getting a little bit of a pullback and a flag, stopping right at the 20-day moving average. So is that a bounce to the upside? One of the ways you can determine whether or not you want to be in is, does it break that flag, and does the momentum indicators that we see down here, does it turn back around and move up to the upside? Right now, it hasn't totally done it. It looks like it actually wants to fall a little bit with the momentum indicators. So it may go a little bit deeper. Wouldn't surprise me whatsoever, and hopefully it won't surprise you, that it could in fact run all the way back down to these past lows that we see here. I'll just draw a line in there about the 164. Wouldn't be a surprise whatsoever. But does that mean we've got a complex head and shoulder thing that's happening? Possibly. But in the question that was asked over on in the Investor Business Daily, is AMD, it's actually the IBD's stock of the day. Now, I can't, does anybody, I mean, can you see, and if you can understand why this is the stock of the day, please leave a note. Why is, what's going on with AMD to make it IBD's stock of the day? Take another look over here at what it looks like on the weekly chart. And let me erase that. And to me, okay, here's the good news. This pattern you see it putting in right now is a horizontal flag. Now, horizontal flags tend to resolve to the upside, and they are oftentimes more powerful than a flag that slants down and to the right. And so where is AMD of interest to us right now? Well, to me personally, the way I like to trade, it's too close to needing a breakout. I like it better if it comes back down. I like the opportunity better if it comes down and back into these wicks. Now, it doesn't have to get all the way down to that line right there, but let's say it gets down to just above the 20-week moving average, which about 168 to 169. I would put an alert. If that takes off, then I would jump on the potential opportunity to buy this to the long side. Let's see, Jake, Tesla. Yep, sounds good, Jake. Waiting for it to bounce off the 34. That sounds very, very a good opportunity. Tesla, nice chart with strong TSI. Yes, without a doubt. Square had a good gap up. We'll take a look at that. Any of you over on Instagram have anything? Hey, Gustav, how you doing? Nice to see you over there. If you do have any questions, please jump in because it's all dumping into the primary chat box over here on YouTube. So that's what we've got going with that. And let me pop down to one other. Finally, the other thing that is so exciting about what's going on in the market is this. Start saving, sharing. Okay. This story right here, Elon Musk teases that Tesla Roadster is coming in 2024. and it won't be another car. There won't be another car like this. Now, what's Elon teasing? Now, that's a cool looking car. If that's what the Roadster looks like, sign me up. The only, and as soon as I can find out where to put gas in it, that'll be even better. Sorry about that. A little bit of humor. And so that looks pretty good. So what's the price tag on this puppy? He said something about, there we go. No, that doesn't show what the price tag is. Does anybody know what the price tag is on the new Tesla Roadster? I had read something that he's going to have some vehicle out there with $100,000 or $200,000 price tag. Does anybody know? Speak now or forever hold your peace. I don't know. But it looks really good, and that also could be what's driving the excitement to get Tesla going back up in the right direction. A couple of other things that are going, Rivian, one of the other EV companies here in the States, apparently is not doing well, laying off a large portion of its employees, and at least Elon Musk is saying, you know what, it's probably going to go bankrupt. We'll see. Then Apple continues to slide. Bitcoin over 60,000. Anybody else a Bitcoin? Wow. Is that what it is, Graham? So it's about 200,000 north of that. You can reserve one for only $45,000. Okay, let's see what else we have. AMD, we talked about. AXON, basically we had win in that. It took off nicely after earnings, and it is a body cam maker. Did really well. Here we go. Rivian stock. A buy or sell? Big question. It's cutting its workforce by 10%. Elon Musk predicts that it's going into bankruptcy. And now we've gone full cycle, and there's the last part about Cathie Woods. One of the other things I want to remind everybody of, and I'm really excited about this, next Monday, we are going to kick off something really excellent, and it is this. Myself and my good friend Mike Lamoth are going to jump together. We are going to basically start a podcast at 12 noon Eastern time. So that means, I gotta click on the camera at 6 o'clock in the morning, Hawaii time. Mike and I are going to basically be discussing the trading truths. There are so many myths out there and false beliefs about what it takes to be a great trader. We're going to work together to basically destroy those myths. And at the same time, Mike is absolutely phenomenal from the aspect of excuse me. And I don't know if you've read his book, but his book on the trading mind wheel, absolutely great book. Mike's done that. Then, of course, my book, the Trade Your Way to Freedom, is one of the things that we're going to be just chatting. We're going to basically spend 45 minutes welcoming any kind of questions, and we're going to be also knocking it down with regard. Mike's going to cover mindset, trading psychology, and I'm going to talk about the essence of a system and how to trade it and that kind of thing. So I encourage you, there will be notes going out. You're going to want to watch that, and it'll be live over on the YouTube channel, Market Tech Talk. So like I said, I'm excited about that. It's really cool. And as long as we're in the middle here, I might as well do a real quick blurb. Did you know that if you write down longhand, in your journal or anything. Write down longhand your plan for the week, your plan for your trading, you're trying to memorize something. You write it down longhand, and there's something that connects in the synopsises of your head that make it where you learn it better. It becomes more deeply seated. And so I encourage you, take a pen or take a pencil, number 2 pencil, of course, with an eraser, and start writing things down in your journal. And if you don't have a journal, well, AutoPilot Trading does have a journal. Let me get that over to the right place. There we go. And I'll put the link on how you can find this on Amazon down in the description. Okay, the ads are over. Now let's get back into looking at the charts. That's what I do really extremely well. That's my strong point. So let's take a look at a couple of the question mark. So did you want me to take a look at SMCI? Let's take a look at some of these old, not old, but these past performers that basically took off like Nvidia, did a really, really great move up very quickly, and also then is kind of getting a profit-taking standpoint taking place. And this is an area where it becomes very evident. I'm going to take the Fibonacci off of this for the time being. We can always put that back on. So what we're seeing here is an example of the jackhammer effect. Now, the jackhammer effect, as I've said, is something that tends to happen either at bottoms or tops. And it is the first time you see the jackhammer effect start to happen is price actions reverse after a nice long run up and they hit against one of the moving averages, either the 8 or the 20. And they hit. And the moving average tends to then, I wish I had my drawing tool, but tends to bend over as we see it bending over there. Bends over there, and then we come back up a little bit higher up here. And again, it's jackhammering against the 8-day moving average, until finally it breaks. And what happens with that is that moving average starts to roll over. I was going to say bend over, but I don't want anybody to take that the wrong way. It starts to roll over, and it reverses its roll, going from being support to being resistance. Then once price action is below a particular moving average, look what's happening today on SMCI. It's pulling right back up, hitting the 8-day moving average and stopping. And then it rolls over again. And what will happen is it will then come down and it will hammer against the 20. And the 20 will also start to roll over. And it will basically do one of these things where, darn it. It will do one of these things. Let's see if I can grab that. There we go. It too will start rolling over until it hammers to the downside, and then you eventually get both the 8 and the 20 rolling over together until they cross and do a bearish cross in this case, and then they go down and start working on the 50-day moving average until it breaks below the 50-day moving average. What are some of the examples of this? Well, a couple of examples are things like Netflix a couple of years ago. I'm going to roll this back in time here. Whoops. I'm going to roll this back in time here. Now, here's a really great example, as you see here on Netflix. Netflix had a big run. It runs up, then it starts hammering against the 8-day moving average, you get to get close behind the 8 and the 20. And when that happens, you start going, okay, pay attention. This may be starting, this may start to be, this may start to be turning into a top. And the other thing to remember, tops tend to be a process, and bottoms tend to be events. What does that mean? It means that a top will take some time to show the rollover, where bottoms tend to be a single or maybe a couple of day event before it starts moving back up. Very interesting, but that's just the way it is. But as time goes by, we continue now, we've got to close below the 8 and the 20. We come back up and we retest, but it retests on the rally attempt at the 8-day, but it doesn't stay above it long. Some people get sucked into a trade here and fail to put in a stop loss down below, slightly below that, and they watch as the trade goes against them and continues to fall, as we see right there. So we came back up, bounced against the moving average again, dropped below it, and then as you can see, it continued to hammer about against the 20-day moving average right there until it broke below it, and then it's just the, I guess you'd call it vacuum, or the way the price action then just pulls the moving averages down. And whenever this happens, what you want to be on the lookout for is the rebound. And the rebounds can sometimes be a 1 or 2 day thing, like we see here. This was a rebound back up towards the 50-day moving average. Once we broke through it, then it responded to the downside, and it ran another, I'm going to drop it about 13%, or about $44 on Netflix. Perfect example. You see the reverse of that on the other side. Is once we start to reverse up the other side and starts hammering, jackhammering against the moving averages going up, then the moving averages start to pull up also, as you can see. Now, this one didn't take long to break through the 20-day moving average. And once it closes above that 8 and the 20-day moving average, there is a draft, if you will, that pulls the moving averages up. And then the cycle repeats again and again and again. Kind of interesting how that works. And so if you've never heard of the jackhammer effect, that's what it is. So let's see here. Podcast. Oh, okay. Next up is the cues. Let's take a look at the cues. What are the cues telling us? And again, now that you know something about the jackhammer effect, are we getting that on the cues? And I would say, yes, we are. Now it's going to have to complete, but we're getting it initially against the 8-day moving average. Let me remove that. 8-day moving average. And what about the weekly? Well, the weekly, we're probably not getting anything right yet, and that's absolutely correct. But it is starting to knock against that. And the next clue that will come up that we may be rolling over is what? It's that we get a close below the 8, followed by shortly after that with a close below the 20. And at this point, we've got this nice little trend line set up where that will also be another level of dynamic support. So price action could get to that level and bounce off of that as a potential flag down to that area, which I would look at. You could see it if the 20-day moving average continues to go here. Once you get your bearish cross on the 8 and the 20, then it becomes a stronger level of resistance to watch moving up to the upside. And if that happens, if it moves up to the upside and hits that, that's either a sign to go ahead and take a short position, or if you went long on a counter trend trade, look to take profits when price actions run into the ceiling of the dynamic moving average. So that's what we've got going on with the Qs. What about the Russell IWM? IWM is showing us that. Come on. So now, does anybody have any stocks they want us to take a look at? Please let me know. See if we can see if Russell's busy. There we go. Russell, it works. So as we see on Russell, Russell is also really interesting. We've gotten up here, and this is a weekly chart. Price actions have approached this level up here, and so we've approached the past high. And on a weekly chart, I'm getting negative divergence here on the TSI, as you can see down here. And that oftentimes spells that, shows us that we're going to, that is a precursor for a market reversal and a downside market. So that's one of the things that could be taking place here. We have this is this day right here, or week, excuse me, right there. That is more or less a shooting star, which is a bearish reversal signal that remains in effect until the price action takes out the high there, and so that is still in effect as a reversal signal. So, are we getting any jackhammering effect here? No, not yet. But we did, notice there's a good example of it over here. So what I'm saying is just pay attention to the jackhammering effect on the moving averages. Once they start to tip over, see if it starts getting hit again and again and again. And that's typically after you've seen price action have a nice run up like it did here. Let me show you that. A nice run up from here to here, and then a pullback. And what's the other piece of the pullback that's kind of interesting is if this is a low volume rally attempt, then that is also a clue that this move may not be in earnest. Let's see if we get, there's IWM. Why am I not getting, there we go. So you can see most of the move, once IWM got back above the moving averages, has been on less than average volume. So okay, Dash and Uber and hi Pohaku. I hope I'm saying that correctly. And so, yeah, I've checked them out, and on ICT concepts, they're interesting. However, for me, they're not in. They seem like they're more aimed at day traders. I mean, I may be wrong about that, and my techniques and my studies are aimed at people who are looking at swing trading and also letting their profits run. And I've been using it very successfully for the last 15 years. So, yeah, thank you. So, Dash and Uber. Cool, man. Thank you. Oh, on which? You're not from on Island, are you? So, hey, let's take a look at Uber. Jake on Uber. Yeah, we basically got a real nice breakout. Go over to the weekly chart first. Nice breakout. And we did a little bit of a pullback last week towards the breakout area. And what are we getting today? We're just getting kind of a consolidation. Again, you know me, Jake, I like the pullback concept. So if we get a pullback, back towards about $76, that would be 30 years, man. Oh, in California, cool. Yeah, I used to live in Pleasanton. You northern or southern, man? So so that's what I'd be looking at, Jake. Look for a pullback into there. Let's check a couple of things here too. Okay, here's where we want to be paying attention on things like Uber is as you see here on the momentum indicator, that it does look like it wants to roll over. Now, that's not a reason to, throw the baby out with the bathwater. What it is a reason to do is go look at what happened the last few times that the momentum actually shifted to the downside with a cross of the cross of the TSI and or a drop of the market forecast below the 80 line. And you'll have to go back here during this pullback. This is kind of really pretty, Jake, if you will, is nice controlled pullback right to the 40-week moving average, which equates to approximately the 200-day moving average. Stopped, had earnings, bounced, and away it went from there. Then if you get a situation like this where you get a big run on that, keep your eye open for pullbacks into the 8-week or the 20-week. The 8-week constitutes somewhere between the 34 and the 50. Is the 40 or the 50, correction, 34 or the 50-day moving average. So it corresponds there. And so Uber, well, I love the stock. But I want to basically be buying it at the right time. And as you see, I'm going to wait for my TSI to cross back up. We may get a drop right here below the 80 line like we did over here, and that's okay. But just go and see what it did last time. You remember that one, and this is a perfect example, is that dropped down to there, and we came down to here, right here. Yeah, let me grab this. Let me draw a line across here, Jake. There we go. Now let's go back to the weekly and look at that. That's pretty doggone pretty. Where as I said, that eight week adjust to the approximately the 34 to the 50-day moving average. And I'll do one other thing for you. I think. Hold on a second. Edit my studies. Go back here and just take a look at this. I know this is going to baffle you with brilliance here, Jake. Of course, I want it to show up. Okay. Yeah, there it is right there. Let me move across. Look at that right there that we're looking at right there, Jake. Right at the 34. The 34 came down and dipped and then broke back above it. I need to add the 34 back onto my chart more often. And so, and yes, I trade for a living. Yeah, Jake, I do too. And I learned the trick on the 34-day moving average from John Carter and his group there. And I utilize it a lot. And the secret, if you're wondering, folks, what the secret of the 34-day moving average is that a lot of day traders watch the 34 like a hawk, and they plan their trades around that, so that they get a bounce off of that, and so it can be a really great line of demarcation. And so, okay, man, have a great day. See ya. Make sure to check out the recording over on the YouTube channel. Yeah. That's a great pointless. That's an absolutely fantastic question, and it partly depends. I think the question is what is the I love Uh, Graham, I love that. Why do they use the 34? I don't know. They just do. I've never asked one. I've actually never met a day trader. That's not true. I have met day traders, but the next time I see one, I'll ask them, why do you use the 34? And no, the reason they use the 34 is that it typically lines up with one of their, and I can't remember which of the moving averages um, on the intraday chart, and I think it's either the 15-minute or the 30-minute chart. Could be even less than that, but there's a line up there. Okay, and so pointless. Back to your sorry. No kidding. Well, welcome from Chechnya, man. Back to the question: what is the best platform for trading? Uh, you know, I personally trade the Thinkorswim platform. Why? Because it basically allows me to put in the type of orders. I use a fire and forget conditional order process that I have for the AutoPilot trading service. What it does allows me to put in one order that will trigger at a particular price point, and then if that triggers and I buy the position, I can then it triggers 3 OCO orders or maybe 2 OCO orders that will allow me to exit with a profit of 10%, exit with a profit of 20%, let the remaining portion of the shares run, basically let my earnings run. And so, and cover me to the downside with set either trailing stops and or hard stops. And so it works very well. So that's what I like about that. I know a lot of other people trade things like TradingView. Some people trade interactive brokers and this type of thing. I have never traded those. I used to be a big Fidelity fan. I traded Fidelity for almost 20 years with their Active Trader Pro. They were not very, and I'll just say it right here, they were not very friendly to traders. They were basically friendly towards buy and hold people, and that's the way they would set up their orders. The Thinkorswim platform was developed partly by Tom Sosnoff, who's gone on, sold it to TD Ameritrade, and now, of course, it's been picked up by Schwab. Schwab, that was one of the things when they bought it, they swore they would never change it. And so far, they've honored their words because they realize it's been rated one of the best trading platforms year after year after year for, gosh, the past, like I want to say 10 plus years. So again, I encourage you, check out Thinkorswim through Schwab. Anybody else have any suggestions on what a good platform is to trade? Please let that be known. And so let's see, guys, where are we at? We are running into the end of the market. And Uber, oh, Jake, you had one other one you wanted me to take a look at. Sorry about that. I got DoorDash. Is DoorDash the one that develops like food, that delivers like food and stuff? Is that true? And so, yeah, any comments over there on our questions over on the Instagram? Okay, so DoorDash. So if you're hungry, call DoorDash, right? So it looks like Jake, okay. Hold on a second. Let me get back. And one of the things that I want to be sharing during these live sessions is kind of it goes through my routine, the routine that I do on a regular basis during the last hour of the day, which is one, I check all my holdings. Currently, I'm flat the market. What does that mean? When somebody says they're flat the market, I have nothing invested. My system took me out of my last trade on AXON. And so that's where I'm sitting. I'm patiently waiting for I'm patiently waiting for my setups and then triggers that I basically share with everybody over on my either the YouTube channel, or you can get the Precision Entry Point training course that I do, which shows you 3 setups that are just absolutely insane for getting in and out of the market. And I will take a look at TQQQ because it's one of my favorite ones to trade. But on DoorDash, Jake, I'm getting a bearish harami right here. We've already had earnings, which is awesome. Let me go over and see where we broke out of. Yeah, broke out way down here, originally off earnings here, continues to grow higher. One of the things I always want to know is how much of a run was this? This was a run of about 35%. So does that pique my interest in DoorDash? Yeah, it does. What's my volume on a daily basis? A little bit over on average. 4.4 million shares. My momentum, though, is leaving me a little bit weak right now. Had a really great buy off of earnings, and we basically fell back down. Where did it gap up? It gapped up from there, and then it came all the way back to here. I'm going to draw a line here, Jake, and I'm going to extend that to the left, because one of the things I like people to do is look to the left. Does this level here correspond at 109 correspond to any past levels of support? And I don't see anything except for these candlesticks right here. And I don't think, actually it does if I run over far enough. Runs into an other zone of past resistance. And so we've broken out past that resistance. I like it against 109. Or Jake, the other thing you could be taking a look at is just draw a trend line across here. And so it gives you a couple of target areas to plan a trade off of. One of the target areas is this zone between the, right there, between the 8 and the 20, and recognize that that zone is going to continue moving up. The next zone is down here against the trend line itself. And then if it really blows itself up, it could drop even further than that. The other thing in analyzing this is throw a fib on it from this high to this low, and that'll give us our and isn't interesting where it came all the way up, touched, and then came back into the magic fib box, and then it did come into the magic fib box here and then bounced higher. So that magic fib box worked here. Get rid of that. Get out of here. There we go. And get out of there. And so yeah, I like Dash. So any other thing? I was taken out of AXOM because it violated my rules. My rules are that if going into earnings, if I'm not up 10%, I sell the whole position. And the day of earnings, yeah, we're reported after hours, it dropped down and it never got back to over 10%, even though it took off like a rocket ship after that. So again, I was taken out on a trailing stop, and that's what happened. TQQ, yep, and this is going to be basically TQQ, and we will do DraftKings here shortly. Yeah, what I covered this a little bit earlier. TQQ, because we do cover TQQ weekly with our AutoPilot Trading Premium service, because we like to trade this a lot. And you may not know it, but TQQ usually sets itself up about 4 to 6 times per year where you can capture about a 20 to 25% gain on those particular areas. That compounds out at greater than 100% per year. So just take a real quick look here, because that was the bell. Yeah, looking for a little bit deeper pullback. And it looks as if, like everything else, it looks as if it's still working off of a bearish engulfing pattern 3 weeks ago. So this is a reversal pattern. So we'll see if we drop down below that. The thing that'll really kind of set us off if we hammer down on the 8-week moving average and it drops below it and closes below that. It's got a little ways to go. So Dance King. Okay. Hey, thanks for joining us with us. If you want more tips like this, please check out the YouTube channel Market Tech Talk. And and remember that Mike Lamoth and I are starting the Trading Truths podcast. When? Did anybody remember when? Did you write it down? Next Monday at 12 p.m. Eastern time. Just remember, I've got to get up really early to partner with Mike. And yeah, I see you over there, Mike, on Instagram. So aloha. God bless everybody.